There we go. I forgot to mute on the stream. You almost got me this time. All right, so we are live in Discord, Twitch, StreamYard, and not StreamYard, YouTube. Jeez, can't talk today. Yeah, so we're watching Lululemon and OXM for earnings today. We also have Cooler. Let me just pull that one up as well. And obviously it's not as high volume, so we're not going to see much. That's why I kind of had OXM pulled up. So we'll have to wait for the actual announcement. So the one to watch for today is going to be Lululemon. And, you know, if you're a bull, you're probably going to have a bad time. Unless you want to trade short-term, you know, little pops and stuff like that for maybe 1 to 3%, which is okay as well. What's up, Duco? So let me just pull up Lulu all by itself first, and we'll just kind of do some top-down analysis here really fast. And I also want to minimize the Discord stuff over here. So we got a pretty easy range here to the upside. We've got a pretty easy launch point right here. Okay, and I'm just going to turn on the 4-hour, and of course you can see we're kind of in that range, right? So we've got a very easy distribution range to look at. The kind of golden rule for earnings is usually a 10 to 12% move in the given direction, so we'll just go ahead and plot that out as well. And I'm just going to do that with this guy right here. So 12% puts us roughly in this area down here. So, you know, previous support, that's pretty good. I like that. You know, it's acted a couple times, acted as a resistance, and it's a rough range. It doesn't have to be to the cent. I hate when people get like super specific with their their levels. Don't do that to yourselves. Let's kick it down to the 1 hour here. I kind of like the participation here, not so much today, obviously, but I kind of like the the wickedness, right? So personally, what I'd be looking for is just a quick pop to the downside, maybe below this box, above this line, and then a potential recovery into maybe a fib retracement. I really wouldn't want to look for maybe a huge pop to the upside or any of that stuff just yet. We'll kind of have to see where the actual volume goes. And I haven't looked at the earnings itself yet, other than, you know, they're, let's see here. Thank you for sharing that, Porter. Lululemon Athletica guides for Q1 EPS of 2.53 to 2.58 on revenue of 2.355 billion. Versus FactSet analyst consensus of 272 per share on revenue of 2.4 billion. So, you know, it's not good, but, you know, I don't really care, right? Because I don't have to. All I have to do is look for these little setups right here, which have my signature that I like. So I can draw a box just like this, and then I can color it just like this, and then I can just look for a break, a retest, and then a push to the upside. So that's all I got to look for if I want to just be nice and lazy, and I love being lazy. So let's be lazy. So in terms of supply and demand and impulse, we've got bearish impulse right here. Obviously, we're past the 25% threshold. Let me just go ahead and map that number for you guys. 25%. 25%. Okay. Oh, so we're not past it. We're very close, though. All we got to do is just kind of look for potential entries up into this 25% level. But again, if you're, you know, it's a $325 stock, so you're not going to get a whole bunch of crazy opportunities there. You know, so if you're just trading the bounce, that's kind of the safe part of the trade. And I'm just going to move this line up here as well, just so we can erase the fib, because I don't like having clutter on my screen. You know, so this is kind of where a lot of the bounce scalpers are going to be kind of looking to catch a small piece of it, right? They're just going to be looking for, you know, bottom of this box, top of this box. They're in and out. It's going to be algos mostly. And then you've got the actual, you know, the correction traders, which are going to try to trade a deeper fib. And, you know, it's not looking good, right? We're probably going to see bearish continuation, you know, if anything. So I'm anticipating a pop out of this box here for H-shape continuation, because that hasn't even hit the 25% pullback that we see 90% of the time. And, you know, that kind of tells me there's a lot of bearish strength here. So I wouldn't really be going long in this case. Sorry, until we come down here and until we see a stronger support step in, right? So right now, you know, we've technically broken. So this is probably the area where I'd start considering looking for a bullish entry, but I'm not going to jump in just because it's red. That's kind of silly and it's very dangerous. And I know a lot of people in the market do that, especially when they see candles kind of bouncing like this. But that's really where you just hurt yourself. So if I'm a long trader, the only trade I'm interested in is going to be a retest of this orange box from above, and then a confirmation to the upside, okay? Or if I see another signature, which I teach the lifetime members about, you know, then we can look for a retest of that you know, with a break below that zone and then a buy up, right? So right now we're seeing a break below the previous signature here, the end of this impulse, but we're not really seeing a strong buy up. So in this case, we have like one high risk limited opportunity here, and it's going to be on a break over this candle so far, right? And that's it. So no reason to jump in anything super risky. If you're a long trader, if you're just trading the impulse and you're in puts, congrats. You know, I hope that works out for you. If you're just shorting equity, you know, congrats. You're in a much safer position, in my opinion, because you can stop those losses. But there is some bullish pressure here, but it's just not strong enough. So that tells me I'm probably going to get a recovery a little bit later, and you know, we might get a little relief bounce here, but I don't see a long-term reversal for, you know, next week, right? So that's just my personal stance, and we don't like to predict, we don't like to anticipate. I'm just showing you guys what I see and what I'm not seeing. So I'm not seeing a strong buy up right now just yet. Oh, I can move this line down, which tells me if I'm a bull, I only really want to look for small base hits. I don't want to go super far and commit my life savings to, you know, a $20 move that may or may not happen, right? I'm just looking for small base hits, small positions, small scalps. I'm not live trading anything on this account because I don't like this company. And let's just peek really quick at OXM and peek really quick at Cooler here, and they're the same. So Lulu is where it's at today. I can also pull up the tops here, and then I can change this over to after hours, and then we can kind of peek at this stuff. You know, this is great. I love this stuff. You know, we made a bunch of money on this one historically. It's a sub-dollar garbage stock, but the moves are pretty sweet. ARBB is also kind of peaking out here. I don't really see this going up too much higher, but I do like it around the dollar range. But let's keep an eye on Lulu here, because we're going to look for that corrective bounce. So in this case, I've got another opportunity right here. And the opportunity I'm speaking of is literally just going to be a quick pop over this up for maybe like a 1 to 3% move. So in situations like this, it's really just following the high of a candle down. And that's just to catch the end of this technical impulse. So assuming we get a lower high on this candle, we then have a 5 candle run to the downside. We can look for like a 3-line strike to break that cycle, and then we can catch a little bit of a pullback to the upside. So Sam Helps 26 asks on YouTube, what are you a swing trader? I do a little bit of everything. For this, since it's an earning stream and since this is consolidated volume, I'm really just interested in the momentum part of it for today. If I'm looking at it for a swing trade, I typically like to let them cool off for a couple days. So I'd probably look at this again like Tuesday, right? Monday or Tuesday. So I'm just going to draw. Let me just move this line down. I drew my lines all close together. Sorry. You get what you get with me, guys. This isn't, I failed art class, right? So in this case, I'm just going to draw this position tool. This is not, this would not be a trade. I'm just drawing the tool so we can visualize it. And that would be a 1% stop loss and then a 3% take profit, which is pretty bold, right? Normally we go for like a 2% on something this risky, but I'll draw 3% just for fun. All right, so in this case, we've broken over this, or I'm sorry, we haven't broken over this threshold yet, so there's no trade yet, so I'm just kind of drawing it to have it. But we'll see. And the same concepts apply to higher time frames. We just get to see it consolidated here in the short term. So when we break over this yellow line, that would be a theoretical entry, but again, I'm not trading. This is garbage, so I just don't like it. Sorry if the CEO of Lululemon is watching this stream. I just don't dig your company, and you can't hurt me. But he's going to hurt me, guys. All right, so I can move this line down again. We've got yet another threshold right here. And the loss ratio and the profit ratio, they all stay the same. So I don't really care too much about this. I'm going to erase this white box, and I'm going to just continue to watch this. So we technically have a bearish impulse right now. There's 5 candles or more in sequence that have lower high. So we've just now broken over that. So we should, in theory, see a clean push to the upside, and we can cap profits at a 1 to 3 risk reward ratio. That's a lot of words I just threw at you guys. Let me catch up on the chat. Bop, bop, bop. Takak says dead, dead, dead. Yeah. That's it. So we're just looking for a quick relief bounce. Again, this is, I would even say a 1 to 3 ratio is pretty risky biscuits. I'd probably just go with like a 1 to 2, or maybe even a 1 to 1, and then just be done with it. I hate this stuff. Let's see. Oh, nice. Yeah, I miss having an N64, man. The battle tanks and the Zelda games. Those are my jam. than Star Fox, obviously. All right. So I'm just going to extend this over here. I'm leaving the yellow line where it is, so you guys, I don't want anyone to think that I'm moving the price action or trying to cherry pick or anything like that. I'm just leaving the yellow line right here. That's where the entry price is going to be. And I just want to show you guys, you know, the kinds of things we can look for very, very simple trading. You know, less is more, and I don't like seeing people overcomplicate trading a lot. And I've got a bunch of shapes and colors here on the screen, like this stuff. Those are just different setups that we can look for. But this would be the only thing I'd be looking for right now, is just a quick relief bounce and then probably continuation to the downside. And then, you know, ideally, you know, in a couple days, then we can recover a little bit, get a retest from this zone from above, and then continue pushing up to the upside. But for right now, we're just looking for this quick little pop. Give me 1 second, guys. I'll be right back. All right, sorry about that, guys. I'm back. Let's catch up on the chat here. I love catch up. I love chat. Oh, you guys talking about your N64 days? Good stuff. Hey, what's going on, man? How you been? I'm looking forward to that barbecue on your behalf, by the way, for your end of Ramadan there. I'm jealous. I want to go on. I want to go to a barbecue. Could have been at a barbecue. Jenna, why did Lululemon drop? Because that's where volume took it. You know, a lot of people put a lot of faith in the actual earnings impacting the end result here. That's not always the case. So nowadays, you know, not 1980s, you know, when earnings comes out, it's just a catalyst that drives volume. And when the volume steps in, there's kind of an inherent imbalance, and then the algorithms just take it. It's not people. It's not, you know, people reacting poorly to a headline in most cases. In some cases, that does happen. But most of the time, it's just institutional algos and HFTs specifically, high-frequency traders. They just drive the volume up or down or have some sort of resolution in the mix. And then, yeah, that's kind of where the second half of the question comes in, is will we see it bounce back? You know, that is usually the result of the earnings and investor sentiment. So if a stock, for example, is overvalued, like I personally believe Lululemon is overvalued, it's just a garbage company in my opinion. You know, then yeah, if they do well on their earnings, it may sustain. If they're undervalued, you know, it might push up. It might, you know, it might recover quickly. But we don't know that. We don't really know either way. And for example, on this stream, right, we saw the impulse to the downside. We're just catching a relief bounce to the upside with a pretty aggressive risk-reward ratio here. For most recoveries, we like to see it go about 2 to 3 trading days before we start looking at things for, you know, support confirmations and things like that. So I wouldn't personally look for a recovery today. You know, it may happen, it may not, but you know, it's hard to justify that risk. And our job is not to predict. It's not to guess. It's not to say, you know, will the price be here? Will the price be there? It's more so, what should I do when the price gets to X, Y, and Z, right? Our job is to just be mechanical traders, and that keeps us from getting in our own way. And all the people in the Discord know I'm about to go on a ramble here. But, you know, we don't predict the price. That is a circumstance. We don't control it. You know, we have zero control over where the price goes. We're a very small speck of dust in the cosmos as far as the price action and volume goes. You know, we just can't compete. So our emotions, our intentions, our hopes and expectations, and the lines we draw, they don't matter at the end of the day. They're just there to help us manage our risk, and that's really what our job is. Our job isn't to be right, it's to be prepared. So once we adopt that mindset and we use appropriate position sizes and we look for things that are lower risk, and we, you know, establish things like passive income to grow in the background, you know, we'll have a much better time in the market. But a lot of the human components of the market don't actually matter, and that's the exact opposite of what you're going to hear all over YouTube these days. But there is no retail trader sentiment that's driving price. It's just not a factor, because 85% of the The participation in the market is algos that are designed to exploit human behavior. So, rather than trying to anticipate and be right all the time, I'm just going to choose to find high potential opportunities and minimize my risk as much as possible when the price breaks out of those zones in the direction that I want it to. So the conference call, for example, you asked about the guidance call. That's just another volume catalyst. It doesn't really matter what's said, at the end of the day. The volume's just going to go one way or another, and I don't control that. So what I can do in the meantime is I can look for patterns. I can treat myself and my own perspective as I can kind of shapeshift a little bit in my brain to, if I was an algo and I wanted to exploit that particular setup, how would I do it? And then just waiting for that exploit to happen, and then trading it in the direction that it should be going, with minimal risk, right? And that's all we're doing here. So even if we were trading this as a given that it's high risk, right? We've got multiple candles here in a row with higher lows, which means this is a bullish impulse, which means I should have some sort of take profit in place as these candles continue to go higher so that I can prioritize minimizing my risk exposure. So in this case, I'm just going to draw a horizontal line, okay? And as soon as this breaks, I can prioritize my risk management and I can capitulate some of that risk right here. As soon as whatever level breaks, right? We still have 20 seconds left on this candle. If it continues going up, that's great. I still have the rest of my shares. If it pulls back, then I lock most of them, guarantee myself a net profit at like a 1-to-1. And then, the rest of my shares can continue upwards, or it can fall back down and I have a net profit overall. But this is the most important part of this right here, and it's guaranteeing ourselves right there. Boom. You would guaranteed yourself a net profit if you sold some of your shares right there. And by some, I mean more than half, right? And that's position size management, and that matters more than any technical analysis or any, any guessing, right? Being right. It doesn't matter, right? All that matters is your position sizing, your rules that you follow, and the impact that they have on the end result. So in this case, by locking, I personally like to lock 75% of my shares at these early targets. This is roughly a 1-to-1. So locking 75% of my shares means the remaining 25% not only has to come back here to break even, but 3 times this risk range to the downside before the profits on that 75% are given back. So I would have just guaranteed myself a net profit on this trade no matter what. I understand it's a high risk setup. It's just a relief bounce, and the overall sentiment here should be to the downside. So I can save that 75% from being part of that downside and only expose a small portion of it, and I just walk away with a profit. Now, if it continues going higher, I still have 25% left, and that can just give me additional profit. It's icing on the cake, right? So that's where we get into trading plan and trading strategy territory, not just, is it going up or down, right? So that part of it, the shapes and colors part of it, that's a very small part of the job. It's all about studying yourself and knowing when to, make certain moves to give yourself an edge, and that's where I would rather see people, spend most of their time and especially money, because that's, the losses take us out. It's not the profits. So I just want to see people's losses get smaller. So no, I probably won't be. I don't know what time that call is. I assume it's around 5 p.m. Eastern. I won't be on that one. I probably will cut this off here in about 20, maybe 15, 20 minutes. But I'm here to answer questions in the meantime. Let me catch up on the Discord chat here. Oh, you guys are talking about Nintendos. Porter's mad because I said his lines don't matter. Yes. All right, good stuff. Brackle said AI algos do what? They exploit people and take their money. I like it. So let's use an example, right? So if we've got a bearish impulse, okay, we know that people are likely going to be looking to trade the retracement, okay? So if I were to draw a box right here, okay, and I'll just erase this, okay, I know that as an institution or as an algo that's been trained by an institution, I know that people are going to be trying to trade this to the upside here, and I also know that people are going to be trading it to the downside to suppress it so it doesn't break through this fib zone, okay? The overall sentiment here should be to the downside, okay? So I need to exploit that. So how am I going to exploit that? I'm going to give people the opportunity to buy shares, and then I'm going to create little problems, okay, where If I'm short selling, right, if I want the price to go down, I need to sell shares. Okay, I need people to buy them, which means I need to provide opportunities for that to happen. All right. So in this case, I need I need some sort of inducement, right? So this zone right here, for example, looks like a beautiful little inducement zone. I know people are going to be watching this resistance for a break, so therefore I can place a trap right above this. And I could say, okay, when people buy this breakout, okay, I can sell them all their shares and then slam the price down, right? Because they're going to have to buy it back cheaper, and that's how I'm going to make my money, right? I'm going to sell it at a higher price, buy it back cheaper, and they're going to be the ones that are giving me those shares, along with these bulls that are down here trying to buy this support, right? Because they're going to try to buy this double bottom, because so far we have a technical, like a textbook setup here. We've got a double bottom potentially forming. We've got good strong volume here at the base. We've got a wide separated midsection. We've got low volume here in the midsection. So therefore there should be some sort of something over here, right? So that allows me, just given all those little factors there, I now have the ability to see, where I can grab the bulls, where I can grab the bears, and how I can exploit this in either direction I want it to, given the overall end result being probably a trap right here for a move to the downside, right? So if I want to make a bunch of money and I work at an institutional firm, or I'm an algo that wants to impress the humans, that's the kind of push-pull that I'm going to create, and I need to set up those little traps, okay? Does that make sense? Like, I know there's traders that are going to want to buy down here and run it up through this box, okay? I know there's traders below this box that aren't going to want it to go through the box. They're going to want to sell. So I want to be with them, right? Because that's the overall sentiment, the overall trend bias here. But I need to take advantage of both audiences to get the price to here so I can actually capitalize on it and lock them in. Okay? So that's all my job is as an institution. So now as a retail trader, right, we got to take another layer of abstraction here. How am I going to participate, right? I know that there's a potential double bottom forming, so I can wait for a confirmation off of this, grab that double bottom up to this area and maybe this area only, because I know that's a relatively safe area. But I probably want to take some profits around this resistance, right? So a lot of traders are going to look for the big overall move. I'm going to grab my profits from here to here, right? Just those base hits over and over and over again. If I'm a short, then yeah, I want to look for a bigger short here and then for a punch to a new low. That's probably my best bet there. But as a bull, we already grabbed the good entry, right? And then if it comes back and holds and we see confirmation here and stuff like that, then yeah, I can grab another small trade. But I don't have to do anything super crazy here. I just have to wait and see which direction they're pushing it and kind of understand why, and then I'm good to go. So in the event of this trade here, we've already locked, in theory, 75% of our shares, and we've got 25% remaining up for a run into this box or above it. And then if they want to slam it down first into that potential double bottom setup, that's okay. We got a stop loss right here. We're still guaranteed a net profit, so we don't have to try to, be bright, right? We have a very clear plan for everything that happens here. Now we just wait and we watch paint dry, and that's where trading gets very boring, and everyone else is excited and losing money, and and we're just over here kind of letting stuff play out and being bored. That's how it should be. So let me drink some of my... Stream is not sponsored by Pepsi, but I'm drinking some Pepsi right now. They can't stop me. I'll short their stock. I'm just kidding. For legal reasons. All right, so if I'm looking at this super close, right, I see these two candles. I see these 4 or 5 candles, right? This doesn't tell me to do anything. Okay, there's nothing I can do based on this information, but when people pull up a chart, they automatically feel compelled to do something, and that's where people hurt themselves. So rather than just doing something, we can wait for the price to get into a meaningful zone where there's high potential and low risk, and then we can look for those low risk opportunities out of those zones in the direction we want them to be, and then we have effectively conquered the market. It's just a matter of doing that consistently, right? So we don't have to make trading super complicated at all. We can just draw some boxes and then just wait for confirmations, right? So it might seem a little complicated, and again, I got all these lines and stuff drawn, but it's really, really simple at the end of the day, and it should be, because when it's simple, it means it's less stressful. And that's what we're after. Elmary, what do you mean with confirmation? So I just mean that if my goal here is to trade, like let's say this double bottom setup, right? Like we got the impulse down, we got the wide separated midsection with low volume, we got high volume at the base. If we get another base here with high volume and then a specific candle pattern, like an engulfing candle, color change, or a break over one of these highs, that would be a confirmation for me. It really depends on the setup and the trend and stuff. But I don't want anyone to get like super bogged down with specifics of any strategy. They really don't matter at the end of the day. And I know people are going to tear me apart, but I could be profitable with an 11% win rate. So yeah, it doesn't matter. My goal is to minimize risk. So waiting for confirmation and using responsible position sizes, those are excellent forms of risk management. And that's all we did here, right? We had this setup, right? We had the impulse, shallow retracement, bearish continuation, which tells us, you know, we have potential here for a relief bounce, okay? But it didn't happen yet. But the setup provided itself, right? This impulse here was the setup. And then we had 5 or more candles in sequence with lower highs. That provided the specific setup, right? And then this confirmation here was when this candle broke over that specific high for that trade. So it really depends on the setup. Duco, we're going to make you profitable, buddy. But more than any individual profit, I'm more interested in how small your losses can be. And yeah, Stickman. So it's kind of natural to want to make it complicated because that makes us feel more validated and that our efforts are being used for something, right? But then we get disappointed because we don't get compensated for all that effort and time and focus. And that's where we kind of work against ourselves. So the simpler we can make it, the easier it all becomes. And that's where, you know, like last week I did a very, very simple strategy where we literally just broke over any validated high. You know, I think it was a 1% loss, 3% take profit, just like this. We literally just broke over any validated high, did like 22 of them in a row, ended up net profitable by, I think, like 2% or something like that. It wasn't huge. But that's enough to prove that with an atrocious win rate and a really inefficient strategy, you know, position management and take profit ratios that are healthy, you know, and just waiting for the price to actually be going in the direction you want it to go can make you profitable, or at the very least stop you from hemorrhaging out all over the place and making it your, you know, making it your family's problem, you know, because you probably want to put the kids through college. You probably don't want to sleep on the couch a bunch, you know, so just kind of slow it down, you know, focus on those losses, make them easy and digestible, and things will get a lot better. Sorry, I keep like jumping this back and forth. I'm not trying to do that to you guys and give you seizures. It's just, I'm just trying to line it up so that it's scaled properly. You bet is your couch. Hey man, it's comfort. Couches are comfy for a reason. Probably not very good for your neck though. All right, we just had a flood of volume here, so one of the algos here is trying to wash this one, so we're probably going to get a nice little pop here over these highs. So that'll be good. So we're kind of getting closer to this exploit territory. So they're making it look very promising, right? They want to create an opportunity here. They want to compel people to buy in. They want to say, hey, we're breaking over previous highs. We got increasing volume. Now's the time to dump your life savings in, right? So now if I'm predatory, I'm going to see this and I'm going to want to exploit it. So all I have to do is be bigger than them. And I just have to be waiting on the other side of something like this, which is a more stable confirmation. So this is kind of the moment of truth. You know, whether or not they allow it to break over this line, because a lot of these buyers are going to hold off because we have this rejection zone. So they're not ready to commit. So this is mostly just starter positions and a little bit just to nudge it. The real commitments are going to come above this box, above these wicks, because that's when people are more confident that they're going to get that move that they're looking for. So knowing that and wanting to exploit that, all we got to do is sit on the other side of it with a little bit of a trap. And then once they start pushing up and committing all that stuff, all they got to do is absorb those and just sell them their shares that they're trying to buy and then just suppress the price. So we either get a rejection here or we'll probably get a rejection in this zone and just sweep it to the downside into a new low. We'll just have to wait and see. But that's the setup, right? There's a setup and then there's the setup. So we'll have to just watch. Do you trade in pre-market where there's not enough volume, or do you see where the market is going and see the resistance levels? So I don't like trading pre-market too much, only because the volume is less consistent, but you have to trade where the volume is, right? You don't want to just pick a chart. Like if I scroll back here on Lululemon, if I see a chart like this pre-market, I can't trade that. It's garbage. There's nothing we can use here. And, you know, you're going to see a lot of that pre-market and extended hours, right? Like if there's no earnings on these stocks, you're going to see a lot of that. Or if the earnings suck, right? Like if we look at, the volume attached to the earnings. Like Cooler's starting to get some volume, which is great, but it's already kind of ebbing and falling off. So there's really not much of a trade here, and there wasn't much of a good entry here either. So it's kind of a mess, right? Like we got a little bit of a zone here that we can watch for support, and then we can exploit that, right? So if I zoom out on Cooler here, go to the 15-minute, there's not much I can do. There's like a little bit of hype, right? And then it's just it's puttering around. Like we're still in a retrace here. But if I look at all the other days here, there's just nothing. So once that volume falls off, this is just not good. Like it's very hard to trade that. So why would I hold it, right? So the trick for these is just getting in and out. All right, so it looks like we got a little, this is an inducement right here. So we've got a good color change. We got a nice inside candle right here. It poked and then it wicked, right? So the theory here is that it should pop over this 322 high. And we should see a nice pop. So we're going to look at the order book. We're going to look at the time and sales, and we're just going to kind of watch this cook. So we got a wall here at there we go, 324.19. So that's up here just above this box, and we'll just go ahead and watch that level. Oops, sorry, I want to zoom in a little bit here. All right, so 323. So we're in the rejection area here. So we're going to look for a little pop over that and then a hard rejection. So we'll see if that's what we get or if it's just going to release to the upside. Either way, we don't have a confirmation here to the downside yet. We just have the price is in a zone, right? So we're in an area of potential. So this is where we want to start watching and paying attention. And if we're still in this trade and we've sold 75%, we need to then look for a place to sell the other 25%, right? So we've got a higher low right here. It validated. That's great. I can move my stop loss from down here up to here, right? So I'll just draw that line. Love drawing lines. And that's from my full stop, obviously. Then we got another 5 candle run. We could have locked another 75% up here if we wanted to, 75% of what's left. But our full stop should be down here just so we have it. And that's just above break even. It's just to protect ourselves in case this doesn't move up. This is the 1 minute. I'm just on the 1 minute here. You kind of have to be if stuff's moving fast. 5 minutes great for overall setup, trend bias, and all that good stuff. But if you want to fine-tune those entries and get specific confirmations, mostly to get out of trades, you're going to want to look at the 1 minute for earnings-specific stuff. All right, so here we go. So inducement time, right? If I'm a bear, if I'm a bearish algo, I can say, okay, we've got this wick rejection. Let's give them a little bit of sell. Let's kind of assess the volume. Let's see if there's enough strength. We'll absorb a little bit, but not too much. We'll just play hard to get, right? Now, that's how I know this is just absorption, because this should have sold off pretty hard, like right away. It might still happen, but this should have happened much sooner at this zone and out of this zone, specifically when this candle closed. So we're in the last half of this candle, which tells me there's still probably good potential for that to get bought up and push up into this little trap here. So if not, that's okay. We just get a rejection at the wicks, and that's all right too. A little bit of a premature move in my opinion, but I'd like to see a little bit more of a sweep above that. So that tells me I can look for a higher low to form, right? That's usually how that goes. I'm just walking you guys through this candle by candle. What's my thought on Cooler earnings report today? I don't personally like that company. I think they had a lot of good potential, and I think they kind of dropped the ball on a bunch of stuff, but I haven't really looked at the earnings itself. Let me just go ahead and pull that up. I just don't like the company. I know they got their call here. I think it's actually going now. I think it's 4:30 for theirs. Yeah, I mean, they're doing well on earnings. Yes, let's see here. They did they're buying a bunch of Bitcoin, just like GameStop and all the other ones. They reported a 181.1% Bitcoin yield, so that's pretty significant. But that was 2 days ago. So, yeah, I mean, they're doing all right. I think they're not timing themselves properly. I think if they put a little bit more of their early focus on things that, you know, would have excelled them forward, I think, a little sooner, they would have done a lot better. But as far as the company itself, I don't think they're able to sustain volume because they're just not attractive to investors, you know. So if that changes, great, but I just don't like them. Let's look at these guys. Yeah, this is another one. We just don't, there's nothing good for that. So Lululemon is still where it's at. And you can see here we got a good spike in volume here. We get this increasing volume. This is algorithmic. This is not, it's not like traders like you and I are just buying all these shares. This is by design. And it's just absorption, right? They're absorbing, they're controlling the price. They want to give us a higher low here to compel those bullish traders to keep buying and push through this resistance level. You know, the shallow retracement right here. So now it's just a matter of like, this is their fishing line. It's in the water, right? They're just waiting to see if anyone's going to buy it. So we'll just keep waiting. So they're currently holding the low here. Used to see this a lot on a lot of the little penny stocks, the little low float biotech guys. Like going into like the 10:30 hour in the morning. That's just straight up manipulation. So now we wait, right? We know that the theory here dictates, let me just move this over here. The theory here dictates that they are holding this support zone, okay? And that they want to push the price up into this box, this red box here. And then ideally, they're going to let it slam down and we'll get a new low because that should continue this bearish strength that we saw. And that all is kind of highlighted by this shallow retracement that couldn't even hit the 25% pullback that we see 90% of the time. So I see this, and I see an exploit, and I see a lot of bullish inducement, and I see absorption now of higher lows. So that tells me that they are definitely trying to set people up, which screams bull trap to me. And that tells me that I'm not going to be going long. Oh, this right here, by the way, another higher validated low. So we would, in theory, then move our stop loss right there for that 25% from this this entry here, which is just below the initial take profit that we had. And this chart is very messy. Like there's just ugly little tiny bodies and wicks, and it's just getting messy because the volume is. They really just need people to step in and grab this, but. You know, this tells me there's a lot of watching going on. So I think once this does break out, I think it should move pretty nicely. You got a bunch of ZR algos on here, zone recovery algos. So they're looking for bigger haymakers probably over the next few days. So we're probably going to see some good volatility on this. Also, let me check SPY really quick because that I'm going to trade tomorrow. Yes. Okay, so for SPY, looking for a bullish move tomorrow, tomorrow, maybe Monday. But I want to see a retest from above on this this range that formed right before close. So we'll see. We'll see where that goes pre-market tomorrow and overnight. All right, so we're kind of in a little bit of a mess here, right? We've got a very clean trend line here. We don't really have anything to the upside, which tells me it's just kind of bouncing, like they're just letting it release, but they're not actually supporting the drive. So they're waiting to see if somebody else is going to support the drive. And we got about maybe another 10 minutes before I got to cut this one off. I do have to get upstairs, but I have a bunch of stuff I got to do first. But does this all make sense so far? Like you guys can see how like blatant this stuff is. And I feel like Charlie from It's Always Sunny. The plan. So now it's just a matter of seeing who's going to step in and try to drive the price from here to here. So 324.19. They just need someone to push it into this box, and that's going to probably be another collection of, you know, like foreign banks and institutional traders and stuff. Like I said, it's not you and I. It's not us. It's other institutional banks, and they're waiting, you know, other firms and things like that. Their algos are just kind of sitting on these things overnight. They're giving them patterns that they can feed into and then trapping them, basically. So all we have to do is see how they operate and then follow them, right? There it is, Duco. That's your boy. Let's put that right there. Bam, bam, boom. This is the one I meant. they're taking our shares. All right. So this right here as well, you know, I've got another reason to move my stop loss up for this theoretical trade that I didn't take because I don't like trading Lululemon. And this is also another very important concept here is that when you see candles moving up like this, you can always just put a stop loss in place. It doesn't have to be, you know, X number of, you know, candles in a pattern, blah, blah, blah. Anytime you see a candle and then another candle with a higher low, if you want to take an entry, you can always put a stop loss right under that. The theory is that the price should just keep going up, right? So if you're justifying it by saying, okay, the price started going in the direction I want it to, but for some reason when it comes back and goes lower, I still want to be in it, that doesn't make sense. It doesn't add up. So that's something that we can use some common sense and just apply a very simple filter for our risk into our trading. And that alone can save you a lot of headache. You can use a very, you know, like you can use a fixed percentage. You could say like 1%. You can say, you know, a specific candle pattern is good, but you don't want to have like all these drastic swings in your trading, especially in this kind of market. Like 2020, I literally used maybe 5 stop losses all year, right? This year and last year, I use it every single trade almost because it makes sense. You know, stop loss is my best friend when it comes to taking profits. It's not just for stopping out for losses. I let the stop losses do all the work for me. And then I just let the stock breathe to the upside when it wants to. So we still got this wall here at 324.19. Let's just go ahead and peek at 313 and 312 here as well. So yeah, you can see that the bigger walls down here are down here in this box. Like this is 313 down here, and this is 312 down here. So there's really not much in the way here if this decides to sell off. So that also kind of reaffirms my thesis here that they want to drive the price down. It's just a matter of, you know, thinking to ourselves, well, why hasn't it happened yet, right? They want to trap more people. They want to get more liquidity because they can't go to their boss and say, I made $100 profit today. Be proud of me, right? They're going to do that, and then the boss will be like, no, you're fired. Get out of here. You're wasting my time. So at this point, this initial entry here would have just stopped out for that remaining 25% net profit on all shares. We would be done with the trade for that long entry. Now we're looking for a sell-off as far as the overall trend and continuation goes. So, you know, we got our wick rejection here based on this guy here to the left, and that's a very simple, very easy strategy here, but that also just kind of shows me it's an inducement. I'm still expecting some pull-up here. I don't know if they're willing to release it to drive the price down here, but they might. Again, we don't control that stuff. There's no point in trying to predict it. We can just look for setups and say, okay, if it enters my zone and then it confirms out of my zone, then I'll trade it. Anything outside of that, I don't want to trade it. Does that make sense? Like, that's the one rule you have to follow. You have to be disciplined, and there's a million reasons why you're not able to. You know, we're all human, and that's what the market exploits. So I'd rather new traders spend their time focusing on that stuff than candles, right? Because this is all just shapes and colors. Like, we have 2 boxes here, right? We could say, okay, when price is up here and it starts to move down, take an entry to the downside. When it's down here and it starts to move up, take an entry to the upside. And that's all we got to do. That's the easy part, the analysis. All right, so we're starting to see some wicks here. This is interesting. It kind of looks like they're just releasing it to the downside. They're just slamming it down, but I don't see a lot of volume on it. So I wonder if this is just like another inducement. So this gap right here is pretty important because this almost always results in a slam to the upside. So this right here is kind of interesting. So we'll watch this candle and we'll watch the next candle because that doesn't belong, right? That little gap right there should not have happened. That screams inducement. It screams trap to me. So right now what I'm saying is there's potential for this whole thing to get bought up and slam up into that box. And then that's where we're wanting to see that powder keg explode. So we're in the double bottom setup, right? We had an inducement here. All they had to do is push it a little higher. But it looks like maybe they're just letting the full double bottom setup happen, which is interesting. We don't really see that too often. Usually it's a high consolidation into like a pop and drop, you know? Ooh, there's another one. Look at that. All right, so I'm going to move this line over here. We're going to watch this candle, the next candle, because these are very interesting formations of candles here. So we should see a lot of volume stepping in here. We should be not matching this volume, but we should be around this area in volume. So we should break over this candle's high, this volume bar's high, which was what, 6K? So we should shoot for maybe 8K on either this candle or the next candle. And then that'll validate that inducement for the bullish double bottom. Otherwise, they're just going to let it go, and it'll slam down, and it'll be hilarious. Either way, I do have to leave here in about 3 minutes. So if anybody has any questions or anything that they want to look at really quickly, I don't want to take my eyes off of this because it's near an area of value. But right here, right, if we just erase all this, right, I'm going to erase this position here. I'm going to erase the stop loss line. I'm going to erase this, and I'm just going to move this, erase this line, erase this line. I'm going to erase this line, or this box. I'm going to put my, I'm going to just erase that. So this right here, again, just a very simple inducement strategy. We've got 5 candles or more in a row with lower highs. Therefore, we have a entry. Right? And again, we put our stop loss 1%. Take profit, some disproportionate amount in the opposite direction, and then we just let it play out, and we follow our rules. Okay, so we know that we've got a double bottom setup. We know that we've got bullish inducement here into a trap, or potential trap. We know that they're likely to let this double bottom play to the upside. We just have to wait for that to have a confirmation. We've got our stop loss below the wicks here, so if it doesn't form and it breaks this pattern, no double bottom. We just have our stop loss there to protect us, and we've got a disproportionate take profit. So the max I can lose on this trade is 1%, and the minimum I can lock in is going to be greater than 1%. So I should be net profitable as soon as that hits. I got about a minute and a half. Maybe I can go a little longer, but I can't go. Sorry, I can't go too long. See, this is absorption, right? Those big chops. So we can watch the order book and the time and sales here. So I see a 313 and a volume threshold test here at 313.25. So that would be a new low compared to this 313.62. So we can watch that wall and see if it gets chipped. So they put another one in its place above it. So 313.95. Yeah, so they're definitely absorbing it here. And we're starting to get the volume here. We need an 8K candle. And this one just closed at 72.52. So, again, we'll just watch the next candle. Oops, I didn't mean to move that. I meant to move the vertical line. Oh, well. So we need an 8K candle here in terms of volume. So we'll see if we get that. But this is a very clean setup. I like it. Clean, easy inducement. It's either going to be a profit or a loss, right? All right, we're in double bottom territory. We're in sweep territory now, so we can watch for a massive buy up. I'm going to zoom in super close so it looks like an epic win or an epic fail. All right, so in that case, we would have just hit the stop loss, and there's no re-entry on this until we see it break back over this line. And that's only for a liquidity sweep to the upside. That is not for the long-term recovery for, you know, several days from now. Yeah, I could zoom in, make it look epic. Maybe I'll put some instrumental music over the background here. All right, so let's see. I'm actually surprised that they just dropped it that soon. I really thought we were going to get the... I really thought they were going to set up for a sweep on this side. They might still. But that's crazy. But either way, you know, like I said, we had the overall sentiment. We had a good indication for what was likely to happen because of the shallow pullback. We didn't get the 25% range pullback that we see 90% of the time. So in this case, it looks like it was just a matter of getting the actual entry off for the downside play. Right? We had the upside play, that one won. We had this one here potentially for that bounce. You know, it went a little deeper, and that's okay. We just take our 1% loss and get out. And then that's it. So pretty straightforward, and hopefully that kind of highlights the importance of not having to guess. Like, we don't have to be right all the time. So yeah, and it worked out perfectly timing-wise because I have to get off of here. So let me end the recording and the live stream. And if you guys are in the Discord, I'll hang out for another minute or so, but I got to jump off. So I appreciate it. I will be streaming also tomorrow in the Rags to Riches channel at 11:30 a.m. Eastern. And I also have a video for you guys to watch. So I'm going to play that on the StreamYard. Yeah, look at that. So if you were in shorts on that, oh, that's nice. Good stuff. Yeah, so let me play this video for you guys, and then I'll end the stream. Non-Discord people, and then for Discord people, obviously I'll hang out with you guys for another minute or so. So thank you all, and enjoy the clip.